Happy Wednesday, my traders. It is Rachel Deshelle, Head of Technical Research and Strategy for Schwab Center for Financial Research, and your host for this Trading Price Patterns class. Now, this is a class where we make the basic assumption that you are already familiar with the basic concepts of technical analysis, and we build on those to talk through looking at price structure, formations, and building our trade plan and pairing up trades that follow suit with our price action. So I am joined in the chat today by my friend and colleague, Mike Fairborn. He's going to answer all the chat's questions, comments that I cannot get to today. So please feel free to put those in there. And then please follow us both on X. I am Rachel-CS. He is Mike Fairborn CS. We do post a ton of different charts, price patterns, things like that as well, different technical updates. And we do have a mid-year market outlook coming up as well. If Mike, you can kind of put that in the chat as well. I know we've been kind of posting that on our X, so that is coming up where you can hear from some of our experts. And if you like this video, please give it a thumbs up and subscribe to us on Trader Talks Schwab Coaching. Now, today we are going to focus our discussion on placing some new trades based off of the trades that we already placed. So we're going to spend a little bit more time in the trade management portion today. But I also want us to look at how to use confluences of support and resistance for our trading price patterns that also align with some other indicators like moving averages and anchored VWAP levels that we can use for entries, exits, ways to manage our risk, and size appropriately for our trading plans. So we're going to get into more of that today, but let's hit those important disclosures here first. So options carry a high level of risk and are not suitable for all investors. The information that we're going to cover is for general informational and educational purposes only and should not be considered any type of recommendation or advice. And we are using a paper money software application today. Keep in mind that there are some major differences between paper and live. So let's take a look here and skip forward at our agenda. You know, the announcement is going to be check out our mid-year outlook. And I think Mike maybe put in that in the chat as well for the link to join that one. Now, we are going to start with our market overview like we always do in this class. We're going to walk through our trade management of our past trades and maybe talk about some new trades to place because I think we see some holds and technical setups in some of those. We're going to look at price patterns, some of those indicators that we talked about, and place new example trades. And then we're going to really finish out our session with looking at that watch list of patterns just like we always do. So we're going to move into Thinkorswim at this point and hit our market update. So right now, we have the S&P 500 that just yesterday gapped below its 20-day moving average. Now, I know that that one is not being shown here, but that resistance that we're going to be looking at, that old support becomes new resistance right at this gap zone. So we're trying to penetrate that gap today, but this entire gap is going to act as a level of resistance. And we're going to get a closure of that gap if price can move above 74.60, okay? Since that was the low from Monday. But the level that needs to hold that is in question is going to be this 50-day moving average right here down below. And that's going to exist right around 73.50, okay? You guys can see where I drew that. That's going to be our level of support here, our line in the sand. Because if you guys can remember early in April, we gapped above that level, or I guess gapped to that level, and have really marched above the 50-day moving average ever since. So not holding on to this level would definitely be a change in the character of the intermediate term trend. We've already seen a little bit of damage to the short-term trend, although we're kind of just trading right in between those zones. So these are going to be the levels to watch. The 50-day moving average, when you see indicators like that, those are levels that you can manage your risk on. So if we do see a close, two closes below that level, or if we do see a certain percentage move beyond that level, that would give you as a trader confirmation of a signal of trend change. That is where you may take some chips off the table, reduce your risk a little bit, and then that may kind of change how we view trading in the existing environment about kind of changing our plan a little bit given the regime that we may be in. So I see Mike put that link in the chat to register. So thank you so much. I know he's been putting it in his tweets as well. So give him a follow on X there. Mike puts out some good content there. Thank you so much, Mike. And then you see a 24. What's the 24 mean next to the ticker? Where are you seeing 24? You'll have to let me know what you're seeing there as far as the ticker. Maybe kind of clarify that question there. Now, since this is a trading price patterns class, I do want to take a look at a price pattern that has been forming on the NASDAQ 100 futures. Now, we are not going to be trading these. We are just going to be looking at the NASDAQ 100 futures to take a look at more smooth type of price action that's occurring in the NASDAQ 100 or the NDX that we've seen over the last couple days. And I don't know if you guys are seeing what I'm seeing here with this 20-day hourly chart, but we see a clear-cut level of resistance right here. And we also see this level of support, now new resistance that was crafted out, okay? So this is a big double top formation. You have the resistance up here really close to 31,000. You had old support here really close to 30,000 or so. So more than 1,000 point type of depth here for this double top. Now over the last couple days, we have seen that confirmation of that double top, okay? So if you guys are kind of looking out below, let's take a measured move of what this would look like. We're going to take the highs to the lows here, and we're just going to subtract that from the breakout point, just like we do for our other price patterns, taking those measured moves. We could possibly see a move all the way down to around 28,862. Now that's not a guarantee, you guys. So this is just showing what a measured move could possibly be from this formation, because one thing that we know about price patterns or markets itself is they love this symmetry in price and in time. It doesn't always play out like this. This is why we say patterns aren't guarantees. But typically, if we're kind of seeing this move happen over a certain amount of time, so this was from June 12th all the way to the break that we saw yesterday morning, that was about 2 weeks of time, or I guess it was about 11 days of time. So not too long there is what we kind of saw, and we have seen a confirmed break of that level of support, now new resistance. And so now what price is doing is it's moving through this really tight range over the last day and a half. So if you are a trader that's looking to manage some risk at some of these levels, you may take this entire depth of this range that we're kind of seeing with resistance right around 29,915. You got support right around 29,560 or so. If we do see a breakdown here, which we may actually see, we could see another measured move to the downside here around 29,200. Okay. And I see BJ saying that would take us to the 50 simple moving average on the daily. Yes, so a confluence of support there is what we would definitely call that. And that's what we want to focus on today, because when you see these confluences, they are telling you that the market's really speaking to you pretty loudly about the validity of that level. So a confluence, think about it as like two rivers. So you have two rivers meeting at one specific kind of zone or one specific area. The same works in technical analysis and with markets. Maybe you see a horizontal zone of support or resistance. And maybe at the same time, if you add like a 50 period moving average, you may see that that indicator may align at that same level, creating that confluence. And so what that does is it creates really a magnet of eyes of all the market participants to that specific polarizing level. And so that's why these levels become even more important. And a lot of times they do end up being almost like pretty big reversal levels. So when we do see those confluences, keep that in mind as well. So we're going to remove that, but I just wanted to walk through some of those levels since we are in a price patterns class, and these are some pretty clear cut patterns that we're seeing on these shorter time frames in real time. Okay. So now let's move to some of our trades. And I mentioned we want to focus a little bit more on these today with kind of what we're seeing. So we had a few different ones. We're going to walk through the DoorDash one first, and wow, that has pulled back today. I looked earlier and we were about $1,000 more up than we are now, which I already decided we're going to take some profit because we are at a 20% profit figure here. And so what we're going to do, this is going to be a time where we're going to take some of those chips off the table. Now I'll show you the technical setup that we're looking at in DoorDash here, okay? So what we are seeing, and you can kind of see, we have a little bit of a bull flag possibly taking shape on the 20-day hourly. We still have a little bit of a pullback from what we've seen. But if we take a look and zoom out, if you guys can remember, we traded, I'm going to remove some of these indicators so you guys can see price action a little bit clearer. Okay, so if you guys can remember, we traded this double bottom here. Now we do have a possible larger double bottom taking shape if I kind of extend this level out with resistance near 190, but what we focused on last week was really this smaller double bottom. And that really put our measured move to this level right here, kind of right around where our profit taking zone is. But today, you can see the long wicks on either side of our candles today. That's telling us that, and we also have a pretty large candle. So pretty long candle, which is telling us the range for today has been pretty wide, which means there is more volatility in this name. We are seeing pretty much an equidistant push from the bulls and the bears at this point. So we're gonna just do our due diligence and take half of our chips off the table here. So we're gonna change our OCO order to basically only having two contracts, and then we're going to close out the other two contracts at the current price. So what we're going to do, we're going to adjust those price levels a little bit. I'm going to go to Dash here and change these to 2. So I'm going to go to cancel replace order. Just change this to 2 contracts, confirm and send. And we're going to change this other one to 2 contracts as well. Okay. So remember, you always have to change the working order first, or else you're going to get a rejection. Okay, so we change that to 2. Now what we're going to do is we're going to take our profit off the table here on this one and just take 2 contracts off. So we're going to create a closing order. You guys can kind of see the width of the spread right now. So it's a pretty tight spread. We got $24 by $25.75. We are going to work for the midpoint. We're going to ask for a little bit of price discovery. This could save us about, on 2 contracts, I mean, that could save us close to $200 here. So we're going to put this order out here. If we don't get a fill by the end of the class, we'll adjust that. So we're going to take profit right there with those 2 contracts, and we just got a fill. Okay. And that's one of the differences of paper money. You may see these fills occur quicker or just in general on the paper money platform, you never do a fill at the midpoint on a trade. So that was our first one. Now, I do want to mention with this one as well, we do have implied volatility creeping up in this name. So if you look over here on the left-hand side, we have now an implied volatility percentile of about 55. Okay, so that tells us we're in the upper half of implied volatility. And so what we're going to watch for, since we already took half of that off the table, we also need to move up our stop a little bit too. So that's another adjustment that we need to make. But what I want us to keep our eyes on for our future classes with this name is for this resistance right around 190, 191 to come into play, because this would provide a larger bullish reversal, and we're almost seeing a confluence here of this anchored VWAP. Actually, we're seeing an exact confluence of this anchored VWAP come into play right at that horizontal level of resistance. Now, I've had this question in the other class last week, and I don't think I was able to get to it, but someone was asking about the anchored VWAP and how you can anchor it to a specific day or specific point. And so I want to talk about that for a second, because I think you can use the anchored VWAP with your trading to identify some of these really polarizing levels where it's kind of drawing a lot of attention to these levels, which could give you either more valid levels to manage your risk or more valid levels for seeing a reversal. And so with the anchored VWAP, it's just like a volume weighted average price, but instead of recalculating every day like a volume weighted average price, it anchors it to one point. And so what traders do is they use these anchored VWAPs and they anchor it to pivot highs or pivot lows. Specifically in this case, I anchored it to the all-time highs, and I did this just by right-clicking on the candle and by setting the date too. And that's all you have to do on the anchored VWAP. And again, this is a study that's already built into the platform. Some traders may anchor it to a specific day, like a day of earnings. So if you want to use like an earnings pivot or something like that, you could use this day that we had for our earnings pivot. And it's kind of funny because the anchored VWAP's kind of coming in really closely to that level here, which is also telling us, hey, we're running into a little bit of resistance today, which again probably even more confirms that we're likely doing the smart thing and taking a little bit of profit off the table. Okay, so I want you guys to pay attention to those, because we're going to talk about these indicators and these confluences as we look. I had a question on what is the time frame on the implied volatility percentile. That looks at the current levels of implied volatility in what the stock has seen over the past year. So we use this a lot, specifically when crafting our option strategy, because we want to understand the volatility regime that we're in. So I just added this implied volatility study below the price chart. And so if you take a visual of this, you can kind of see right where we fall, right in the middle. And so if I really took right where this level is and I extended this all the way to the left, oops, extend to the left, I can see that roughly half of the days over the past year were above or below that level. So that's kind of where we're getting this 55 implied volatility percentile. It's a little bit higher than half of the days of the last year. Okay, so that's where that's coming from. Hopefully that helps. Now, what I want to look at is also moving up our stop here on this one as well. So let's take a look at where our stop sits, okay? And our stop is sitting right at 15, whoops, cancel, replace. Here, let me make sure I do this correctly without canceling out our order. We're going to go to cancel replace order, and right now the price of the stock is sitting, or the price of our option is sitting right around 24 or so. And so what we can do, we can say, okay, we want to move up our stop to say if the asking price goes below $22, we want to get out. And what we can do is we can change this to a stop limit even. We're going to say, we're going to put in our limit below at 21 because this says as soon as our stop hits, we're going to send a limit order and we're going to give ourselves a little bit of a buffer. This is going to come below our stop price on that next tick. So it's going to allow us to have more control over the price. But of course, remember, if we do have the stock gapping down overnight or something like that, we may not see a fill. So this is kind of one of those ones that you want to keep an eye on if you're going to use a stop limit. So we're going to hit confirm and send, and we are going to send this order. So we moved up kind of like a little tight stop there. Since we're noticing a little bit more volatility today, we've noticed that it's picking up a little bit. Okay. So let's take a look. Okay. So we're done with DoorDash here. Let's move to our next one that we're kind of seeing. And I told you guys we're going to spend a little bit more time on the trade management portion because I think we have a few different things to consider. Okay. 3M. This was another one. We have a short put for the 155 for July. And let's take a look at what we were looking at on 3M. Okay, so we picked the time frame because we saw this long-term pattern really taking shape, this double bottom pattern that we watched a breakout, a confirmed breakout occur, and this day that I'm highlighting right here is the day that we entered, okay? And we sold a put because we said that, hey, volatility was a little bit heightened. We still were bullish. And so we were kind of looking for price to reach some of these high levels, maybe right around 177 or so, because that would have been kind of our measured move from this level. So right now we are, and I need to show our order on this one. For some reason, okay, this one isn't showing for some reason. But we do have our short put on this one, or we don't have an open order on that one, that's why. So we do have our short put and we're just kind of waiting that one out. We're up on that one overall. So we're just gonna let time and price kind of do its thing for us to see that one through. Now let's go through another one. I'm gonna jump down to Prudential real quick. So we have a long call about 3 months out from expiration here. So we're going to look at Prudential, PRU. We'll review what we saw in the charts. Okay, so what we saw in the charts was we had this double bottom, almost like a cup and handle pattern as well. And so last week we bought that breakout, and this 107 was our confirmation. Now we are seeing a little bit of a pullback here, but we still have that exit in place right at the breakout level. Okay, so we have that level that we're managing our risk at. And I want you guys to take a little bit of a closer look at this one. I'm going to remove this Fibonacci. That was showing us where our profit taking zones were at 113, 118 that we talked about last week. I'm going to remove that, remove this as well so you guys can see. What does this price pattern look like? I mean, if we kind of looked at this on a longer time frame, this could tell us a little bit more. It's looking a little bit bull flaggish. So we're going to wait. We still have our order set in place. We're going to let it do its thing. This is a pretty nasty bearish engulfing candle though, because we saw that little short-term bounce from these lows here. It's engulfing 1, 2, 3, 4 days of price action so far. That means this entire body of the candle is entirely encapsulating the prior few days. So follow through from this would look like a break of today's low tomorrow. Okay, so that would kind of invalidate maybe this thesis here. We have our levels in working for us, okay? The other one that we have here is our open door. Now, we talked through this one. We have 10 long call options for the 16th of October, the 5 strike call. Now, it's up a little bit today, but overall we are down on the position, but fear not, we have time, okay? And we didn't have a stop order on that one because We have about a $10,000 trade risk size. So that's kind of what we're working with. We're not spending more than 5% of our account in a trade. So we started with an account size of 200,000. So this was a pretty small trade that we did. If you can see the net liquidation, I mean, when we placed this trade, it was about $1,000. And so we talk about our risk in this class as well. Our risk is going to be max $2,000. So that's why we didn't put a stop order on this one, because the entire trade was about $1,000. I think today would give us an opportunity to possibly look at this trade again. So we're going to look at this one on open here. Okay. And couple different things that we're looking at. You can see I anchored that anchored VWAP to the all-time highs again. And where does that confluence occur? Right at the measured move of this range. So this is why we love math. We love trading. We just love how it works out sometimes. Again, it's not a guarantee. But, okay, remember, we were looking at this very long-term range down here. Okay, so I'm going to zoom into this. We were looking at this very long-term range, and I have this level drawn because when we placed this trade, we were looking for a close above the high of the low day, or a hold. Okay, and so we were looking for a close above this candlestick. And so we got that on this day, on the 15th. Okay. And now what we're kind of getting is we're seeing this retest of support yet again. Okay, so we're seeing the retest of support. We can see that volatility is still pretty low. So if you can see here, it's been downtrending. We can look over here on the column side on my watch list that tells us our implied volatility percentile. It's still relatively low. And so what that's telling us is now it may still be a good time to be buying options. Now, typically, we do not want to double down on a trade, on a losing trade, especially if it does not stay within your risk parameters. So that is a major mistake that traders make, is one, doubling down on trades, but also because that commits more capital on a trade that's already kind of leaking. But it also, a lot of times it has traders kind of increasing their size and things like that as well. So what I want you guys to keep in mind and what we're going to look for here, because we can still see there's been a pretty clear-cut range that's been established. And so I want us to look for a signal to possibly still have this be a tradable bounce. So those of you that are not in the trade in your paper money account that may be looking to place possibly a new trade, I want you guys to keep an eye on what's happening today with the price action. We had our low day. I'm going to zoom in a little bit further so you guys can see it. We had our low day, which was yesterday, okay? You can see that doji was lower than the low of today, okay? And that doji showing up at such a crucial level of support gives us a lot more context to this being a possible polarizing reversal level. And so confirmation of this possible reversal would occur if we saw, I'm going to move this over here, if we saw a close above the high of the low day, which would be a close above 437. Okay, so if we do see a close above 437, which it was trading above that earlier today, but it's been kind of met with a little bit of selling pressure throughout, we are going to then enter into a long trade, buying a call option once we do get that confirmation targeting the upper bounds of this range. Now, another way that you could look at this from a trading perspective is maybe jump down a different time frame. Okay, and so I want you guys to take a look at this as well. What are you guys seeing from a shorter time frame perspective here? I'm going to just zoom in if you guys are seeing the same thing I am. So what we are seeing is we had this double bottom formation. Now I know this gray line is super thick here because it's from our last drawing, but it kind of still reigns true here. Actually, I'm going to remove it so you guys can see it better. We have one bottom here. We have another bottom right here. And what do we have right here? We have our neckline. Okay, so that was old resistance. We broke out. Now it's new support. And right on this hourly bar right now, price is retesting this level. Okay, so we're going to wait for that close above 437, even if we want to take a really short-term trade here and open for a possible measured move up here, okay? So if we're doing a few different contracts here and there, that's kind of what we can look at for a high delta trade, very short swing trade, holding it probably a day or two in that case, okay? But again, we're going to wait for that one. So that's one of the ones that we are not going to place yet in this class. Okay, so I'm going to look at the chat here. Billy, we are not walking through the call option for SPIR today, and just because I was looking at the options and they're a little bit light on volume and open interest, and the spreads are a little bit wide, so I want to be a little bit cautious on those. I have another trade for you guys, a couple other trades actually, ones that we can look at. Okay, one of them being Berkshire Hathaway. Okay, so we're going to take a look at Berkshire Hathaway. We're going to anchor our VWAP right to our high, our all-time high in Berkshire Hathaway. And I want you guys to kind of take a look at this formation that I drew here, okay? And tell me what that is in the chat. I know you guys already know what this is, and I'll kind of draw some more indications to show the price formation that we're looking at here, okay? And okay, so we see that this is an inverse head and shoulder. We had an early breakout to it. And the reason why I wanted to put the anchored VWAP on here was because that was a valid level of support that was retested. So we had price that re-entered into the pattern, which is a common thing that you may see. Okay, so we've talked about that. Price may re-enter into the pattern, but it may find another level of short-term support, because a lot of times what price does, especially when it breaks out, maybe not on enough volume or maybe not on enough momentum, price kind of dwindles and finds its way back into that magnet of wherever that level of demand is. And so right there, it was right at the anchored VWAP there. So that acted as a magnet for price action to retest, firm out that level again. There could have been stops placed at that level. And so you just have these little pockets of liquidity. You see this one last flush before that breakout yet again. So what we are seeing is indeed that breakout. The anchored VWAP stands below as a level to manage risk. So if you are looking to possibly go long a stock trade in this, what we're looking for is an entry here, kind of right where we are right now. And I'm going to make sure I have the right drawing tool here. So we have our entry right at 495. We're going to take a measured move. So you take the lowest point of that head, measure it to the base or that neckline, and you add it to the breakout point. So wherever the breakout point was. And you guys, look how that math kind of works out, okay? Again, it's not a guarantee, but you guys know I love to chuckle when this happens. Okay, so that is gonna be our measured target, okay? We're gonna use that for the stock, and we're gonna use that for the options as well. Now the anchor VWAP at 487, that's our level to manage our risk. So we have a favorable risk to reward here. So we have our risk that is about 487 to 495 or so. So that's about $8 of our risk. And we have our reward looking like it's about $20 to the upside. So that would be what a trader would say is a favorable risk to reward. Okay, so you guys can kind of see how we're using these indicators with the price action to formulate levels to manage our risks. Now, another thing we want to look at is the volatility regime, because if we are using an option strategy, we want to take a look at implied volatility and for that to give us an indication of the regime that we are in. And so what we're looking at, we see that volatility has been downtrending. You know, you can do technical analysis on anything. I saw a funny meme a couple months ago that showed a picture of the mountains, and one mountain was higher than another. And I kind of want to draw it to show you guys this. So the mountains were like this, okay? So we had the mountains like this. And then they had another picture below with the same mountains. And the joke was normal people just look at the mountains and they see this. But technicians look at the mountains and they see this line, okay? So that's what we're going to kind of apply to this concept here of looking at implied volatility. We can see that, oh, we can just draw a line right there. Our level of resistance for implied volatility, we can clearly see that it's been a downtrend in implied volatility. So the regime still favors long options in this case. So what we can do, we can take a long call trade, and we're going to see how long this pattern has taken to form. It's been about 3 months before the breakout. So we're going to look about 3 months out or a little bit more in our price action for our expiration for our options, okay? Because we know markets love symmetry and price and time. So if it took about 3 months for this pattern to complete, it could take about 3 months for this measured objective to be met, okay? The other thing here, which I think provides a really good kind of thing to mention, is we do have this upward slanted neckline. And so we've talked about this in this class before. It's been a little bit, but when we have these upward sloping necklines, especially on an inverse head and shoulders, these are taken as more of a bullish outlook. So we already know that it is a bullish reversal type pattern, but when you have that slanted neckline, slanted up, what does that necessarily mean? Well, that means that you have a higher low on your lows when we're looking at the trend, and you have a higher high as well on that formation of that right shoulder. And so if you have a higher low, higher high, rather than just the same level of lows on those shoulders and the same level of highs on that neckline, this clearly is telling us, hey, there has been a clear indication of the change in trend because we have higher highs, higher lows. And so that gives us more conviction in a bullish type of trade, which is why we're going to go with the high conviction trade using a long call. Now we talk about different time frames in this class as well. I promise we'll get to the trade in a second. If we piece down to a shorter time frame here, what else do we have? I want you guys to take a look at this. Look at this right here, what we're seeing right here. On a shorter time frame, this is a 20-day hourly, we have a fractal inverse head and shoulders pattern. Now we know the symmetry isn't perfect, but again, we have that higher right shoulder here. So we know it's still slanted, so we know the right shoulder is going to be a little bit higher, but it's definitely a lot higher here. We're getting that retest of support right now, okay? So again, levels to kind of manage your risk a little bit, but I wanted you guys to take a look at that because if you are trading on one specific time frame, specifically the longer time frame, you may want to look and make sure that the shorter time frame aligns with your perspective to give you more conviction in some of those trades and vice versa, okay? Because the highest conviction trades are going to occur when you have an alignment across time frames for price, okay? Doesn't need to necessarily mean that you need to see the same exact pattern on a different time frame like we saw this one with Berkshire Hathaway, but it does give you, as long as you're seeing higher highs, higher lows, you're seeing a similar structure of a bullish reversal or a bullish price action, that gives you more confirmation there. Okay, so let's get into placing that trade real quick, and we're going to look 18th of September. We're going to look a couple months out because we talked about how this pattern took a little bit to form. We're going to look a little bit in the money with a delta of about 60. That's going to tell us that if the stock price goes up $1, our option should theoretically go up about 60 cents. also tells us we have about a 60% probability of that option expiring in the money. Now, if you guys look at the spread, we have a pretty tight spread here between the bid and the ask. That's the first level of liquidity that we're going to look at. We look for a level of less than 10% of a spread. We only have light volume today. We have a decent amount of open interest, but again, first measure of liquidity is looking at that spread there. And so what we're going to do, we are going to right click on this order. We are going to buy custom with OCO bracket. Okay. We already talked about how our profit target is going to be 515. Okay. So we're going to use our, our conditional order on our upside to go through that one. So I'm going to click that right box there. We're going to say when Berkshire is greater than or equal to 515, we are going to use our limit and we are going to unlink it here to just say, hey, whatever the price of the option is at the time that the price of the stock reaches 515, reaches our target, we're going to send a limit order at the current bid at that time. Okay, so we're going to hit save there. And then for our stop to the downside, we're going to give ourselves a little bit of wiggle room. So what we're going to do, we're going to make this 4 contracts here. And we're going to give ourselves, we're going to put it at a 75% stop. So we're going to look at 2170 times 0.75. Okay, and that gives us 1627. Okay, this says that once the asking price hits that price, because that's what a stop triggers off of on a sell order for options, it's going to send a market order. So again, same risk apply if you see that gap down in price overnight there. So that's what we're going to work at. Our max loss on the trade is going to be the amount that we are paying. So the amount of our premium. We're looking at about 8,700 there. Most we can make is uncapped since we are looking at a call option. Again, we chose this path because we have a lot of conviction across time frames, across price levels, things like that. So we're going to put that into our price patterns class there, and we are going to hit send. Okay, awesome. Okay, so I know we spent, like I said, a lot of time on the trade management portion. I wanted you guys to, I wanted to spend a little bit more time on that today. We also discussed using that anchored VWAP for levels of polarity, using it as levels to possibly manage your risk on the options or the stocks. I kind of gave this as an example for the stock. And then it wouldn't be one of these classes without just quickly shuffling through a couple patterns, okay? So we're going to do that real quick. So let's go to AppLovin. Okay. So we're going to go to AppLovin and I'm going to hide this study for now. What we just saw in AppLovin is a head and shoulders pattern here, you guys. So I don't know if you guys saw that as well, but you have the left shoulder here, the head and the right shoulder occurring at this high. So you had this increase in price leading to that, and you may see quite a bit of a breakdown. If we take this measured move, we're going to measure the top of the head to the neckline, subtract from that. Oof, yeah, that's really ugly. So if we do see a pattern failure here, we're going to be looking for a move back above old support, now new resistance. Now that would tell us, so above 480, that would tell us we may see a pretty quick move to the upside. So failed moves may turn into fast moves there. Okay. Where is another one? We just had a range in Corning that we broke out of. So, well, I guess we're kind of back in the box. So we poked out of that today. If we do see possibly a reversal, you may be looking around 170 as support. And then American Express. This is one I talked about in the watch list, actually, on the another segment, and I'm going to anchor that volume weighted average price. You guys can see this is kind of like a double bottom formation. You had that retest reclaim of the 20-day moving average, giving you a confirmation of a long or directional bullish trade to the upside. You have the anchored VWAP from the all-time highs. in around here at this gap ledge as a level to manage your risk. So you could be looking at a couple different levels to the upside. First level of resistance right around 370, next around 387. Okay, folks, we are at time. If you did like this class, please smash that like button, give a thumbs up there. Thank you to Mike in the chat for helping out with all those questions, comments, and requests. Please give us both a follow on X. He is Mike Fairborn CS. I am Rachel CS, and please subscribe to us on Trader Talk Schwab Coaching. I will see you next week where we'll look at more patterns, and I will see you later, traders. Thanks again.